Good afternoon, everyone. First of all, we just want to thank CalChiro. CalChiro is passionately committed to the advancement of chiropractic and to the individual holistic well-being. And while pursuing its mission, CalChiro provides members boundless services and programs such as today's webinar, which they have sponsored. So thank you again, CalChiro. I'm going to go over a couple of really quick housekeeping details for you. You should have all received the handouts with the login invitation that was emailed to you. Throughout the presentation, your audio will be muted, which means you can hear us, but we can't hear you and you can't hear each other. You can type questions into the question box at any time, and we will allow time at the end of the webinar to answer those questions. Because your feedback is very important to us, please complete the survey that will pop up at the end of this webinar. It shouldn't take more than a minute to complete. It provides you with another opportunity to ask any questions you may have, and it provides CEA with valuable feedback that we utilize to constantly improve on these webinars. So, all of that being said, I would like to introduce to you our presenter today, Jessica Hawthorne. Jessica joined CEA in 2016 after serving as Senior Employment Law Counsel and Manager of the Labor Law Helpline at the California Chamber of Commerce. She used her employment law knowledge and expertise to produce and conduct webinars and seminars, as well as to contribute to CalChamber publications. Jessica previously acted as California Correctional Peace Officers Association Internal Counsel and as an associate with Young, Minnie & Core, a law firm specializing in labor and employment and charter school law. Jessica Hawthorne is a graduate of Widener University School of Law, and we are very happy to say, is now the Senior HR Director with CEA. So Jessica, I'm going to turn this all over to you.
Thank you, Sandy, and good afternoon, everybody. We're going to be talking about navigating California's wage and hour laws today. As Sandy mentioned, we're going to try to keep time for questions. If we run out of time and are not able to answer your questions, please be sure to still type your question into the question box or put it into your evaluation, and I will go through and answer each one individually. So do not be concerned if you don't get your question answered. I will follow up with you absolutely to make sure you get that information. So let's get started. We are California Employers Association. Thank you for having us, California Chiro. I do want to be clear, I am an attorney, but I am not your attorney, so anything I say today should not be taken as legal advice. So there's my legal blurb for the day, and I will move on. And we're going to talk about 2018 minimum wage laws, exceptions and exemptions for minimum wage, independent contractors, and I know that's a hot button item. We've already gotten 3 or 4 questions from you folks today, so we're going to talk about that ABC test and how it could impact your organization. Meal and rest period requirements, overtime rules, sick leave and holidays, record keeping and final paychecks. So that is a full load. It's a lot of information. I may just, you have the information in front of you, so I may not spend a lot of time on particular slides because you have the information, so we can get to more of the meat of what people seem to be concerned about. But I will cover everything that I just mentioned. All right, so 20 minimum wage laws and counting. We are now, as of a couple months ago, at about 29 minimum wage laws in the state of California. So where do we begin? California has our own labor code, and we have what are called Industrial Welfare Commission orders, or wage orders, and those regulate wages, hours, and working conditions of employees in the state of California. So if you have a big all-in-one poster of all the federal and state requirements, you should have a wage order, which is usually about 15 or 16 pages, posted right next to it, so employees can review that. And one of the questions, whenever somebody has a wage and hour question, the first place to look is typically that wage order, because it will have, if not the answer, at least the information that will help you deduce the answer. So make sure you know where that wage order is and that it's posted for your employees to see. So who is an employee? An employee is someone who actually performs services for you that benefit your business. So minors, undocumented workers, everybody's an employee so long as they are not a properly classified independent contractor, a volunteer, a student or a trainee, and partners and owners are not considered employees for purposes of the wage orders. Of course, the law is a little complicated in these areas, so we'll go through a lot of these issues to clarify so you understand where that gray line may be or where a red flag should pop up every once in a while if you're hiring people who you're not sure if they're an employee or not. So let's start with the basics. Minimum wage. All employees in the state of California must be paid at least the minimum wage for every hour that they work. So the state of California, which we're going to focus on and not the other 28 minimum wages in the state, the state minimum wage in California is $10.50 an hour for employers with 25 or fewer employees. Larger employers, it's $11 an hour. Those minimum wages will go up on January 1, 2019 to $11 an hour and $12 an hour respectively. The workday is important to understand. The workday is not 8 to 5 or 9 to 6 or whatever people typically do their work. It's a 24-hour workday. And the reason why that's important is because in California, we pay overtime if somebody works more than 8 hours in a day or if they work more than 40 hours in a week. So it's also important to know what your designated 7-day work week is. Your labor commissioner is going to presume it's Sunday to Saturday. However, you can say it's Monday to Sunday. You just have to post that notice on your poster so employees know what that 7-day period is. So by way of example, if you have an employee who works 10 hours in one day and doesn't work at all the rest of the work week, they're going to be owed 8 hours of regular time and 2 hours of overtime. Same difference is if they work 7 hours, 6 days a week, that's 42 hours in the work week, they're going to be owed 40 hours of straight time pay and 2 hours of overtime. So the workday and work week is very important. Regular rate of pay is important if you pay commissions, non-discretionary bonuses. Non-discretionary bonus, by way of example, is if if you personally treat or assist in treating 6 patients this week, we'll pay you 5% of the money we brought in. That's a non-discretionary bonus because you've committed to paying that in exchange for a specific event occurring. That's part of the regular rate of pay for purpose of overtime. Sometimes values of meal and lodging are thrown in there. Unlikely that that applies to most of your organizations. So SB3 a few years back raised the minimum wage, and we will increase each year, and it will end, all employers will be at $15 an hour in 2023, and then after that the legislature has the option to adjust that up or down depending on economic circumstances. But be aware that every year, January 1, the minimum wage is going to be going up, and starting January 1, 2019, it's going to go up $1 every year and stop in 2023. An important distinction to note, if you're one of those employers that maybe has 24 employees right now, and you hire 2 people tomorrow, you're automatically a large employer for the purposes of minimum wage. So you don't have any lag time to adjust or look back time to determine that you're a large employer. The minute you're over 26 employees are over, you've got to pay that higher minimum wage. So if you're paying people right at minimum wage and you're close to that 26 employee mark, just pay attention to that because you have to move on a dime on that one. So just for fun, these are just a few of the cities and municipalities that have minimum wages. If you have people working in any of these locations, make sure you're aware of these different minimum wages. On our website under additional resources, it's a free resource and you can download our fact sheet. So you have that as a reference if you have people who work throughout the state. A very, very important distinction in California is whether an employee is exempt from overtime and other wage order requirements, or whether they're non-exempt, which means that they are paid by the hour, they need to get their meal and rest breaks, they are owed overtime if they work more than 8 in a day or 40 in a week. Exempt employees get paid the same no matter what, subject to very limited exceptions. And exempt employees must meet the job duties tests as outlined in the wage orders. So very high-level employees, licensing requirements, there's varying exemptions that may apply, but look at the job description and what a person is doing on a weekly basis to see if they meet the exemption test. If they do meet the exemption test, they have to be paid the minimum salary. So both of those rules apply in order for somebody to not have to be paid by the hour and for overtime and get those meal and rest breaks. So for additional clarification, California law is assuming and presumes that all employees are non-exempt. So in order for somebody to meet an exemption, they must clearly meet it. There needs to be no gray area whatsoever. And I typically say, if you're questioning whether somebody is actually exempt, they're probably not. And it's really hard to get in trouble if you're paying somebody by the hour and giving them overtime and giving them meal and rest breaks. If you find out later they're actually exempt, no harm, no foul. But if you do it the other way, you make somebody exempt, you're not tracking their hours, they're not getting their breaks, they're not getting overtime, and you're wrong there. It's a very expensive mistake with 3- and 4-year statutes of limitations on unpaid wages and so forth. So presume that everybody's non-exempt. As I mentioned, in order for somebody to be exempt, they need to meet the job duties test, but they also have to meet the minimum salary. So in the state of California, in order to be exempt from overtime, if they meet the job duties test, they have to earn at least 2 times the state minimum wage. So I know we've got these 28 other minimum wages. For purposes of the exemption salary test, we only care about California's minimum wage. So right now, it's $43,680 for smaller employers and $45,760 if you have 26 or more employees. Again, that's going to go up on January 1 because the state minimum wage is going up on January 1. There are a few different types of exemptions outlined in the labor code and in our wage orders. Administrative, executive, professional. We also have some computer professionals, some physician exemptions, some sales exemptions. We have some worksheets available that we can assist people with, and they're also available if you do Google searches sometimes. But it's important to go through that process to make sure that somebody meets the exemption duties test. So as I mentioned at the beginning, there are some exceptions to wage and hour laws through the wage orders. So if your parent or child or spouse works for you, they are exempt from the wage orders. Your partners and shareholders are also exempt from the wage orders. Be clear that that is a legal status. So these are owners of the business. These are people who influence the business, either have bought into the business or have that decision-making authority and also are exposed to personal liability if something were to go sideways with the organization. So it's a legal status in order to be exempt from the wage and hour laws as a partner or a shareholder. So the big question that we're going to cover today, independent contractors. But I'll talk about interns first. Interns, again, this is a legal term. In order to be an unpaid intern, there are tests under the law that somebody has to meet. First and foremost, the work they're doing must not displace another employee, and it must be getting credit from educational institution in exchange for the time that they're doing work with you. In essence, an unpaid intern who's getting credit from an educational institution will add more work for you rather than make things easier for your organization. So that's one way to look at it. You can have an intern that's not getting credit somewhere. Maybe they just want to get a little extra experience. That person needs to be paid minimum wage. There's no exception to that. So independent contractors, we'll talk about that a little bit more now. So independent contractors are not employees. They're not exempt. They're not non-exempt. So these are people who are independent, that you have a contract with this person to do something outside the scope of what you normally do in your business. A lot of relevant factors here. Who controls how the person does their job? Is their work integral to the work of your business? Do they have a distinct occupation? Are there particular skills required that are unique to this person or the work that they're doing? Who has a risk for profit or loss? Are they economically independent? Do they need your money, or are you just somebody else that they do these projects for? How long are they doing this project with you? How are they being paid? These are all things in general that the Employment Development Department in California will look at to determine whether somebody is an independent contractor or they should be an employee. But that brings up this fun test that the Supreme Court gave us this year, which is adopted from other laws from other states and federal law called ABC test. So what the California Supreme Court said that in order to prove that an independent contractor is not an employee for purposes of the wage orders only, meaning how the person is paid, they must meet the ABC test. So you hire somebody as an independent contractor. Let's look at these three things. Is this person free from the control and direction of you, the hiring entity, in connection with the performance of the work, both under the contract for the performance of the work and in fact? What that means in plain language is the contract can say one thing, but if it's not happening in reality when they're performing their work, then it's not really happening. B, they perform work that is outside the usual course of a hiring entity's business. And C, is customarily engaged in an independently established trade, occupation, or business of the same nature as the work performed. Again, put in plain language, this person does something that you don't do and is specifically related to the work that they're going to be doing for you. So how does this impact chiropractic offices? Which is an excellent question, and I'm sure, as I could tell from the emails I got from you guys, this is a burning concern. And it's important because if you're wrong, then you've got the issue of back wages, taxes, all sorts of things. So let's look at the first one. And I got a question from one of you guys a little bit earlier today. It's a radiology chiropractic practice. And when work gets busy, bringing on another radiology chiropractor, just to pick up the slack because there's a lot of work going on and they need somebody just to make sure you're meeting your client's needs. This person doesn't have any control by the primary owner of the chiropractic office. They come in, they look at charts, they do their job because this is what they do. They're an expert at this, they're trained in this. The person who runs the chiropractic office doesn't need to give them input because the contractor knows what they're doing. So A, sounds like it could be a fit. You know, this is we're right here on an independent contractor process. So B, performs work that is outside the usual course of the hiring entity's business. So if you are a radiology chiropractic office and you hire a radiology chiropractor to help you out when things are busy, that doesn't sound like it meets B of this test, because your entire business is a radiology chiropractic office. So if you hire a radiology chiropractor, that is exactly what you do. So because this is an and test under the law, you have to meet all three of these. So let's look at C. Is customarily engaged in independently established trade, occupation, or business of the same nature as the work performed? Again, probably not. I mean, this person is a radiology chiropractor, and that's the service that they're providing your business. So it's unlikely that that person is an independent contractor in that particular fact pattern. Now, if this person was brought on as a shareholder of your business or became your business partner, again, that's a legal status, and you want to get legal advice on how to properly set up your business in that way. But that would be an option And then that person wouldn't be an employee or an independent contractor. They'd be your partner or shareholder. So that is one way to do that, but make sure you get legal advice from somebody who sets up corporations and sets up businesses who can guide you on setting up that legal status properly. It's important to keep in mind with this test, the burden is on you as the business owner and employer to prove that they're not an independent contractor. So that's really the challenge that you're going to be faced with if you're bringing people on as independent contractors that do something similar to what you do. Now, another example is, and I apologize, I don't know all the nuances of chiropractic, and I know it's a medical field, so that's a blind spot in my part. But let's say, for example, that you're a traditional chiropractic office, you don't do any radiology, and I know most chiropractors do. But let's say you don't do any radiology. You just do adjustments, and you farm out your radiology, or you have somebody in the next building over who does it. But the business next door is closed on Fridays. So you contract with a radiology chiropractor to come in. They have all the equipment they need to do everything they do, and they only do that radiology aspect of it. Maybe they could meet this test. There's a possibility there. Another example is some chiropractic offices bring in massage therapists, and that's an extra service that the practice can provide. That might meet the ABC test as an independent contractor, because this is not what you do. Chiropractors are not massage therapists. It's a different training, it's a different license, it's a whole different process. It's outside of what your hiring entity, what you as a business typically do. And it's an independent trade, and they're performing services consistent with their independent trade outside the scope of your business. They're controlling how they do it, when they do it. That could meet that test. So it's a tough test to meet for purposes of compliance with the wage orders, and I would use caution, and I look at this similar as the exempt, non-exempt. If you think somebody might not be an independent contractor, you're probably right. So the risk of having someone as an independent contractor who truly is an employee is you're not going to have paid them properly. You're not going to have pay stubs that accurately reflect hours worked and hourly rate associated. They're not getting breaks. Payroll taxes weren't paid. All these things are going to happen. So use caution on that as you move forward when you analyze when you're going to hire an independent contractor using this ABC test. Now, I have heard some attorneys say that because this test only applies to the wage orders, meaning how people are paid, meal and rest breaks, things like that, it doesn't apply to all the other aspects of the employment relationship. So technically, you could have a contract with an independent contractor, and so long as you pay them properly, consistent with the wage orders, you're going to be okay. But that sounds very complicated to me and fraught with landmines. So if you're trying to think creatively on how to comply with this ABC test, I would strongly recommend getting legal advice before moving forward on that to make sure you do it properly. So I want to pause for a second there, Sandy, because I know these folks have a lot of questions about this. Are there any specific questions at this time on that ABC test that we could address?
Hold on just a minute, Jessica. Let me expand on this. We have a lot of questions.
Okay.
Oh boy. Is a vacation relief chiropractor considered to be an independent contractor? Do I need to hire them on temporarily as an employee? I'm sorry, the questions are coming in faster than I can track.
Okay.
So,
well, I get the gist of that question. So the question is, you bring in a vacation relief person to do what you do, while you're not working. I'm presuming. So that's my summary of what I'm understanding the question to be. That would be an on-call employee. So the difference is, so I'll give you an example even with our organization. We have people who do trainings for us throughout the state. Part of our business model is we provide compliance and essential skills training. That's what we do. So our on-call folks are all employees. They may only work 10 hours a year, but they're an employee, they're on our payroll. They get paid sick leave consistent with our policy and the law, but that's it. So if you bring somebody on to do something that your business does, they're an employee, and they may be on call, they may be temporary. There are all sorts of terms that you can put them in a different category, so they don't get health benefits, they don't get vacation time, things like that. But they are required to get paid sick leave consistent with the law, and they should be put on your payroll for the hours that they actually work.
What are the penalties for when you are doing it wrong?
So if under the wage orders, if you're not paying somebody properly, there's a lot of them, because there's penalties for not having correct pay stubs. And if you have somebody as an independent contractor who's truly an employee, they're not going to have correct pay stubs. So that's $100 per pay period. Sometimes it goes up to $250 per pay period. They may not earn, likely they'll earn minimum wage because of the pay level that most of you folks are at. But if you're not, if they're an hourly employee, which they will be if they're not working that regularly, you're going to have to have them as an hourly employee. They may have missed meal breaks. That's an hour every day of extra pay. They may have missed rest breaks. That's another hour of pay extra every day. If they worked any overtime hours, more than 8 in a day, that's a penalty under the law. And then there's interest and waiting time penalties. And waiting time penalties are up to 30 days at equal to 1 day pay. And it goes back 3 years and 4 years, depending on how it is filed. So, I mean, I've had people who screwed up a final paycheck and they owe an employee $6,000. So it escalates very quickly, I guess is the best way to say it. It gets very expensive.
Okay, so more questions. Do you want to continue with the questions, Jessica?
Let's do one more question, and then, like I said, at the end, if we have time, I'll go through some more, but I'll go through each one and answer you guys directly as well.
Okay, so what if a chiropractor comes into another chiropractor's office and markets and treats their own patients, but gives a percentage of what they make to the owner of the clinic? Would that be an independent contractor relationship?
You know, to be honest with you, I would need a lot more information on that one, and there may be an actual shareholder partnership situation going on there as well. So that one I will look at after the webinar and maybe communicate directly with you on that one to make sure I'm actually answering the question.
Okay, all right, thank you.
All right, thank you, Sandy, and thank you everybody for your questions. We promised you guys a wage and hour webinar, so I want to make sure we cover the wage and hour issues, but also address your questions. So I may be sending a lot of emails later today or tomorrow, which is excellent and a good way to get everything done. So let's talk about paid versus unpaid interns. So in California, your unpaid interns training has to meet these 4 tests. And I touched on this before, but it has to be part of an accredited school or a curriculum. There needs to be some educational institution requirement associated with the training in order for somebody to be a valid unpaid intern. The employer cannot benefit. The benefit has to go to the student. You can't displace any current employees with the trainee, meaning the trainee needs to be doing things above and beyond what your regular workload is. And the training has to be supervised by the school or a disinterested agency, meaning it's truly just for the training of the individual, and that individual is getting support from their educational institution or agency through the process. In January of this year, the Federal Department of Labor clarified that paid versus unpaid interns should be evaluated on a 7-factor primary beneficiary test. And really what that means is if you, the employer, are the primary beneficiary of the services, then the intern must be compensated as an employee. And this is very similar to California. But if you, the employer, if this is making your life easier, they're not an intern. They are an employee, and you got to pay them at least minimum wage. The other way the DOL has looked at it is if the intern primarily benefits from the relationship, the internship can be unpaid. So it's kind of two sides of that coin. But if they're the ones getting the benefit, they're learning from it, they're getting extra skills they couldn't otherwise get, more likely than not, they're going to be an unpaid intern. And again, under the federal law, there's this 7-factor test, so no single factor is determinative. You kind of have to look at it as a whole. And this is all that information. And I won't read that to you. You have this information in your materials. If you do have specific questions about analyzing interns, feel free to stick that in your evaluation, and I will get back to you directly. So let's switch gears and talk about meal periods and rest breaks. These are very important because, again, these get expensive as well. And what our law says here in California is that an employer may not permit an employee to work for a period of more than 5 hours per day within that 24-hour workday without providing a meal period of not less than 30 minutes. That meal period has to start no later than 4 hours and 59 minutes into their shift. You may hear, so we have here, it must start before the end of the 5th hour. It has to be for the 6th hour. Me, that is confusing. Whichever works for you. For me, it makes more sense. It has to start no later than 4 hours and 59 minutes into their shift. So if they clock in at 7 a.m., 11:59, that meal break has to start. If it doesn't start by 11:59, and the reason why is because they're still working, because they were told they can't leave, or they were discouraged from taking that break, you're going to owe that employee an hour of pay. If they missed that meal break or the meal break started late because they didn't feel like taking it, then that's on the employee and you don't owe that penalty. But document very clearly why they missed that meal break. Important to note, if somebody works over 10 hours in a day, they are owed 2 meal breaks. If they work less than 12, they can waive one of those meal breaks. But anytime somebody works over 5 and up to 10, they're owed 1 meal period. Unless they work 6 hours or less, they can waive that meal period. It is really important to keep in mind that you are only required to provide those meal breaks. You don't have to ensure employees take them. You don't have to push people out the door. Sometimes people want to because they want people to take the breaks, or people are not taking their breaks on a regular basis, and you want to ensure compliance. But we have this great case, the Toronto case, that made it clear that the employer in this case had a lawful meal period policy. They were a staffing agency. They required all their clients to comply with all applicable laws, and employees were instructed to immediately report missed meal breaks or when they were prevented from getting meal breaks. And so when the employees later said they didn't get their meal breaks and they should have been paid for them, the court said, well, no, there was a policy, everybody was required to follow it, and you were required to report it if you weren't getting them. None of those things happened. Another thing a lot of employers do is they put on their timesheets, they have the employees sign off that they were provided all required meal and rest breaks during that pay period. That's an extra layer of protection as well. So please relieve employees of all duty during meal and rest breaks. Remember, the meal breaks they clock out for, the rest breaks they do not. Rest breaks are only 10 minutes. You can have them longer if you'd like. Make sure you have no control over the employees' activities during these breaks. And always permit the employees to have uninterrupted meal periods in particular. Because if somebody takes their meal break and then you interrupt it because you need them to do some work, and then they have to take their meal break again later, it's going to be late and you impeded their ability to take it. So make sure when they can take that 30 minutes or the 10-minute break, they can take it uninterrupted. Very important not to impede or discourage employees. Don't pat people on the back because they work so hard by skipping their meal break all the time. That's called discouraging people from taking a meal period. Don't coerce people from taking their meal periods either. So here's just an example for your notes as how to properly implement your meal breaks. And it happens. I mean, a patient comes in, something goes on. Sometimes people miss their meal breaks. It does happen. But if it becomes a pattern of practice, it gets expensive. I touched on waivers earlier, but more specifically, you can waive the first meal period of the day if the employee works no more than 6 hours in the day in question. The second meal period can be waived if the first meal period was not waived and the employee in question works no more than 12 hours. Once they get over that 12 hours, they have to have that second 30-minute meal period. But there are waivers available for these specific circumstances. It's important to note for the rest periods, like I said, they're 10 minutes. They should be taken as close to the middle of every 4-hour work period as you can. This is paid time. People don't have to clock in and out. That's another reason why it's good to have people sign off on their timesheets that they received or were provided all meal and rest periods, because rest periods, there's no way to otherwise document them unless you actually have people write that out, which can get a little unwieldy. The Department of Labor Standards Enforcement, this is our Labor Commissioner's Office, gives us these guidelines of when those rest periods should be taken. Again, you as the employer must authorize and permit the employee to take these 10-minute rest breaks for every 4 hours worked. You don't have to record them on time cards because it's paid time. However, we got this interpretation from the Labor Commissioner late last year in response to a case that says employers must relieve their employees of all duties and relinquish any control over how employees spend their time during these rest breaks. So what the DLSC is now saying is we used to all have these policies that employees were not allowed to leave the premises during their 10-minute rest break because it's 10 minutes. Where are they going to go? They need to be back in time, and it's paid time, so we can have a little bit of control over that time. Well, the Labor Commissioner's interpretation of this case was the opposite. No, do not have people, you cannot keep people on the premises. People need to be free to do whatever they want during that 10 minutes, and you can't put any controls over it, or you're not actually providing and permitting that rest break. So check your policies to make sure you don't have that language that says you cannot leave the premises during that 10-minute rest break. In reality, if somebody leaves the premises, they're probably going to be late because where are you going to go in 10 minutes? So you can enforce people returning from those rest breaks timely. You just can't control what they do during that 10-minute time. All right. Moving into overtime. As I said at the beginning, California has a daily overtime requirement. Must be paid 1.5 times the employee's regular rate of pay for work over 8 hours in a day, over 40 hours in a work week, and for the first 8 hours worked on the 7th day of the work week. That's why, again, it's important to know what your 7-day work week is, because the overtime rate is going to depend, especially if you have people who end up working 7 days in a row. In California, we pay 2 times the regular rate of pay anytime somebody works more than 12 hours in a day or after 8 hours on the 7th work day in a work week. And be aware, if you employ minors, it is a misdemeanor to require minors to work more than 8 hours in any work day, regardless of how they're paid. And minor is somebody under the age of 18. It's important to calculate overtime pay properly, and it gets very complicated. Hopefully you guys have good payroll providers if you have different types of pay situations in your workplace. Overtime pay rates are based on the employee's regular rate of pay. So regular rate can be different than the hourly rate if you have different pay issues. So regular rate includes the regular hourly rate, minimum wage or higher. Non-cash payments can be thrown in the regular rate of pay. Non-discretionary bonuses have to be, there's a calculation you have to do to determine the proper amount of overtime. If you pay less for standby or on call, or you give a flat rate, that has to be rolled into the overtime pay. Shift differentials and retroactive pay increases all get rolled into this calculation of how to properly calculate the overtime rate. So if you have different rates of pay, be careful when you're paying your overtime rate. And we gave you this example here. If you pay a flat rate bonus, meaning you have a non-discretionary bonus, like I mentioned before, if X happens, everybody will get this much money. If Y happens, you know, the front office staff is going to get 20 bucks. Those sort of things have to go through this calculation on how to actually pay the overtime rate properly, because it elevates the value of their overtime by having this non-discretionary bonus. So use caution if you have those situations where you're paying non-discretionary bonuses, because you have to do this special calculation because their overtime is going to be worth more than just their hourly rate times 1.5 or 2. Reporting time pay is a situation where somebody shows up to work and you say, oh shoot, you know, we scheduled 2 people today and we really only need 1, head home. What the wage order says is anytime you require an employee to actually report to the work site, they show up and you send them home, you have to pay their half of their usual or scheduled day work. So if somebody usually works 8 hours a day, they get paid for 4 hours just for showing up if you send them home. You can also just have them work for 4 hours, paperwork, whatever needs to get done, and then send them home because they're going to get paid the same anyway. They're always going to earn 2 hours. So if somebody normally works 3 hours a day, they show up, they don't get any work, they're going to get paid for 2 hours. So again, you can give them 2 hours worth of work too, or you can send them home and pay them. A few exceptions, scheduled meetings. If you have a meeting, it's on a day that they're not regularly scheduled to work and you have them show up for an hour-long meeting, they're only paid for that hour. You don't have to pay half their scheduled pay for that day. Acts of God, flooding, fire, something like that. Somebody shows up and they're not able to work, you don't have to pay there either. One thing to do is if you've scheduled too many people or a lot of people canceled appointments that day, you can ask for volunteers, and then people volunteer to go home, then the reporting time pay doesn't apply. So that's an option if that circumstance should arise. Standby time is important if you have the situation where you have people who are just available in case you need them. And it all comes down to what you need them to do while they're standing by. If they just need to answer a phone every once in a while, that's one thing. If you need them to come into the office within 15 minutes of your phone call, that's going to be more likely that you're controlling their entire time that they're standing by, and that's going to be compensable time. The less control you have over how they're using their standby time, the less likely you have to pay them for waiting around for your call. So if you have a standby time issue, we put a lot of information on this slide so you can refer to that. Time off benefits is important, especially in this tight job market, pardon me. You are not required to pay employees for holidays, ever. You can have a policy that only pays full-time employees for holidays. You can have a policy that nobody gets paid for holidays. Exempt employees, it's going to be a little bit different, but it's up to you how you compensate for that holiday. A lot of people say holidays, I get double time if I work on it. Not necessarily. It's really up to your policy and how you've chosen to compensate for that holiday. So if all of your employees get 8 hours of holiday pay, regardless of their status, and everybody gets that 8 hours. And if I happen to work that day for 3 hours, I get 8 hours of holiday pay and 3 hours of work time pay. I don't automatically get 16 hours of pay unless you as the employer have promised it. So you can work on your holiday pay policy in a way that meets your business needs, but also gives your employees and potential employees a little extra benefit, especially in the competitive job market. Paid sick leave, still a big deal. We have a lot of paid sick leave ordinances in the state of California. I think there's 18 now. For the state of California and Sacramento County, we follow California's paid sick leave law. All employees in the state of California, whether they're on-call, part-time, full-time, exempt, non-exempt, must be provided paid sick leave under California law. You must provide a minimum of 3 days or 24 hours of paid sick leave. You can have employees accrue the time for 1 hour for every 30 hours worked, or you can just give them 24 hours at the beginning of every 12-month period. It's up to you. You can require employees to wait 90 days to use that time. So if you have temporary employees, they may get the 24 hours, but they may not be there long enough to use it. Paid sick leave is not paid out at termination. Here's just an example of paying out benefits. Monday was a holiday, for example. Tuesday, the employee was out on paid sick leave, and then they took a PTO vacation day on Wednesday and worked Thursday and Friday. So how much are they going to get paid for this week? If I work Monday through Friday, I called in sick, took a pre-scheduled day off, how many hours did I actually work? I actually worked 16 hours. So let's say I work Saturday. Am I going to get overtime for Saturday? Only if I work more than 8 hours on Saturday, because the hours worked during the work week were only 16. It's not going to put me over 40 hours. Wage statements are very important in California. This has been a source of litigation. The plaintiff's bar has been very busy. A lot of former employees will request their payroll file, and the first thing their attorney looks at is their pay stub. And the pay stub wage statement, if it doesn't have all of these things on it, or they're not accurate, there are fines associated with that. And it's strict liability. There's no defense on that. So, and then once, if anything on here is wrong, then they start digging for more information. So you want to make sure, as a threshold issue, your wage statements have all of this information correctly. And again, if you have an independent contractor who is supposed to be an employee, you're not going to have this. And so that's going to be a violation. So make sure your wage statements are accurate and up to date. The paid sick leave balance available for the employee to use, it can be either on the pay stub or on a separate document. It's okay if it's on a separate document, but it does have to go with each pay stub. Here's an example or a sample wage statement and what should be on it and how it should look. So you may want to just do a little self-audit to make sure that that is accurate and up to date. Employees do have a right to inspect or copy their personnel file and their payroll file. You can ask for the request in writing, and you should, and it should be dated because that date triggers your timeline. So personnel files, you have to turn over a copy or allow an employee or former employee to inspect those files within 30 days of a written request. Payroll records within 21 days of the request. Doesn't matter if they signed things or not. Anything that is in either one of those files needs to be shown to the employee or their authorized representative. I would strongly recommend getting assistance either from HR or counsel to review your personnel files before turning over any information to make sure you're only turning over information that you're required to do. Sometimes these are fishing expeditions for folks, and you don't want to turn over more information than is required under the law. These records you are required to maintain for 3 years after termination of employment. So make sure you're holding on to those, and they should be separate. Once somebody leaves your employment, you should keep those in a different file so they're easier to access. Again, can be available by inspection or provide by mail. You can charge people a reasonable cost to make those copies. Call your local Kinko's. If it's 45 cents a copy, that's what you can charge. That's perfectly reasonable. There's a $750 penalty for not complying with that request for records. And these are the labor code citations for those obligations under the law. Gave you this information just as general guidance. So you're not required to include letters of reference, reports obtained prior to employment, letters of reference obtained prior to employment, investigation notes of a possible criminal offense, or even investigation notes for an internal investigation. None of those things should be in the personnel file, and the employee doesn't have a right to access those. They do have a right, notice of commendation or discipline, layoff, termination, leaves of absence, vacation. Be careful with leaves of absence. If there's medical information, that should be in a separate part of the file because that's confidential. So be careful how you document medical issues and how you turn that information over to others. If you have very limited access to personnel files, it's okay to have it all in one place, meaning only one person has access to that file, but you don't want a lot of people being able to access any medical information in a personnel file. Employees have a right to see the wage garnishment notices, education, training notices, all their attendance records, and performance reviews. So those are things that should be turned over and are probably already in the file. So to close out, we'll talk about what needs to be paid at termination. Final pay should always be a live check. If the employee authorizes direct deposit, that's okay too. Live check is better. You typically have to do it manually anyway. Final pay to an employee is paid at the employee's primary work location, especially if somebody is being terminated. And an employee that is getting terminated needs to be handed their final check the minute that you say they are terminated. That's why it should be a live check, and it needs to be where they work on a regular basis. If they're involuntarily terminated or a voluntary resignation with more than 72 hours notice, calendar days, clock hours, all earned wages and accrued vacation are due on their last day of employment. However, if somebody resigns without notice or with less than 72 hours notice, the final pay is not due until 72 hours after notice is received. So with a voluntary resignation, it's okay to mail that paycheck if the employee requests that in writing. I always suggest and strongly recommend that that request include the mailing address where the employee wants it mailed, because more than once I've heard an employee say, I never said I wanted it mailed. That's not where I live. And the employer is stuck paying the penalties for not paying the final paycheck in a timely way. So if somebody wants it mailed to them, you want that in writing and you want to know exactly where they want it sent. Send it certified mail, return receipt requested. Once you stick it in the mail, that's considered the date of payment. Commissions and expense reports, if those apply to you, commissions are paid when they're earned. So if a commission's not earned until after somebody leaves your employment, that's when you have to pay it. Different rule than their regular pay. Expense reports are the same. Whatever your expense report run is, if it's every 30 days, whatever that is, that's when you pay expense reports. So just a general overview of penalties associated with wage and hour claims. Employees can file an action with the Department of Labor Standards Enforcement for unpaid wages going back 3 years. Waiting time penalties are when an employee claims that their final pay did not include all pay that was due to them. So for example, an employee can say after they quit or were terminated that 6 months ago they missed a meal break and they didn't get their hour penalty, and then not notify you until 30 days after they quit or were terminated. And if it's found that you didn't pay that they were owed that missed meal break and you didn't pay it, you owe an hour pay plus up to 30 days of their wages. So 1 hour of missed pay turns into a lot of money very quickly. Interest is involved, and they have up to 4 years to file these claims under certain circumstances. So it's important to kind of keep up with it and not get behind on making sure everybody's getting paid properly. Failure to pay minimum wage has per pay period violations and higher penalties for subsequent violations. So, you know, if you have the independent contractor situation, or you're not calculating overtime properly and you're paying flat rates for things, you want to make sure you're paying properly, because if people are not being paid the minimum wage, there's penalties on top of the missed pay and the waiting time penalties. So we covered a lot, and I know your heads are probably spinning, and I know there's probably a lot of questions, and we do have some time for a few questions. But again, I do encourage you, if you have specific questions and we don't get to them, to please put them in your evaluation so I can reach out to you directly, and I'm happy to do so. Here's our HRCI codes and SHRM codes, and I'm going to turn it back over to Sandy. If we have a couple questions, maybe we can hit, and then let everybody get back to work.
Thank you, Jessica. What a lot of information, and I've never seen so many questions before on a webinar. And
wage and hour is tough stuff.
Yeah, and especially with that new law that was just passed. So one person I noticed asked specifically if you could answer all of these questions in writing, and then if they could then receive them, because some of them are concerned they may not have asked a question, but it might be information that they would want. So we could do a Q&A document that I could provide to the association, and then the association could get it to their membership. That's a great idea. I'm happy to do that. Good. And then that way everybody, sometimes you don't think of something, it's like, oh yeah, that's a good question. So I'm happy to do that. And a lot of times we get questions that are the same question asked differently. So rather than going one by one and answering the same question, we can put it all in one place. So that might actually be the most efficient way to do it, if everybody would just submit all their questions, and then I'll come up with a Q&A document and I'll give it to the association to give to you guys. That way we can get you back to work, because I know we're getting close to that 1 hour. Yeah, and Jessica, I mean, I think we have about 40 or more questions still on the board here. So,
okay, no problem. I'll go through them and answer them. And then we'll send that document over to the association.
Someone asked if someone can volunteer at your organization and be unpaid.
It depends on the circumstances with volunteers and nonprofit status. So if you are a for-profit entity, it's practically impossible to have a volunteer worker.
Okay. Regarding the ABC independent contractor test, so if you meet 2 of the 3, but not all 3, then they are not an employee, or they are?
No, unfortunately, yeah, the ABC test is an and test. And in the law, when it's an and test, you have to meet all 3 factors. So if you only meet 2, you're an employee. If you meet all 3, you're an independent contractor.
And when is this ABC independent contractor test effective? Is it effective now?
Yeah, it was effective the day the Supreme Court issued the opinion a few months ago.
Okay. All right. If a DC has more than 1 massage therapist, can some be employees and some independent contractors?
That's a great question. And as a general rule, if you have employees doing a particular work function, you can't have an independent contractor doing the same work function, because you're going to fail that test. Because once it becomes part of your business model, like if you become a chiropractic and a massage therapy entity, bringing in a new massage therapist, that's part of what you do as a business. And so you're going to fail that ABC test right there.
All right. Can you be an employee and an independent contractor for the same company?
You can if you meet the test. So for example, let's say you have somebody who's a massage therapist, but she also does IT, and you hire her to do your back-end IT work. The IT work would be an independent contractor relationship, but the massage therapy may be an employee, depending on your business model. But it would have to be that distinct. You know, like let's say, you know, I'm an attorney, but I also paint interiors on the side. CEA could hire me as an independent contractor to paint my office, because that's distinct from what CEA does and my skills that I do on behalf of CEA. But you see how bright those lines start getting because of this test.
So if your parent works for you, can you pay them like an independent contractor, or how would that work to be safe?
You can pay them however you'd like, because they're not subject to the requirements of the wage order.
Great.
Yeah, the wage order is the one that tells you, you know, meal breaks and you have to pay this much an hour and all that sort of stuff. Parents don't fall under that, so you've got some more flexibility about how that pay is handled. That's actually a really good question for your accountant to figure out the best way to structure that. That works best for your company.
Am I or my corporation an independent contractor or an employee?
Did they say they were the owner? I've missed the first part of that.
Am I or my corporation an independent contractor or employee?
It would depend on who you are, what your legal status is related to the corporation. If you're the owner, if you're a partner, shareholder, you would be a partner or shareholder, but the entity may also employ people to run it. So I can't answer that question based on those facts.
Okay.
If you have additional facts that you can throw me, whoever asked that, throw that in there, and then we'll try to answer that in the Q&A document.
Okay. Does travel time count towards overtime?
Yes, it does, and that's another good question, because travel time can be paid at minimum wage even if the person makes $100 an hour, which is totally fine, but it is work time, so it has to be calculated as part of work hours, and it does go towards overtime.
Can an employee agree to work more than 8 hours in a day?
Absolutely, but they have to be paid at the overtime rate for any hours worked over 8 hours in a day.
What if you have a 4-10 schedule? Is that different?
That is different. If you have a 4-10 schedule, what I'm assuming people are asking about is an alternative work week. And the wage orders do describe how to adopt a legal alternative work week. You give the employees notice, everybody votes, you submit the documentation to the state. Once it's submitted to the state, about 30 days later, then you can start the alternative work week schedule. If you've gone through that entire process and you've adopted a 4-10 schedule, that is an exemption from the overtime requirement. However, you can't unilaterally create an alternative work week. You have to go through that legal process with the vote, submitting paperwork to the state, and so forth.
Okay, so I don't know, Jessica, the questions just keep going. Do you want to continue with this? We have lost a few people.
Well, I think people's schedules are tight and they need to get back to their practices, so I do want to respect their time, but I also want to make sure the questions are answered. So why don't we wrap up, but if people have additional questions that they haven't already submitted, put it on your evaluation and then we'll address it in a comprehensive way and get it to the association.
Okay, and somebody does ask, will the document be sent out to non-CalChiro members?
I will. I'll have to. Yeah, I'll have to talk to the association about how it's going to be distributed. I can't speak to that.
Mm-hmm. Okay. And it asks if siblings are excluded from the wage order.
I have to look at the wage order. If somebody would note that question, I have to look at the exact wage order because I can't recall off the top of my head. But if somebody puts that down, I will answer it.
Okay. All right. Well, there's no end. So I'm just going to...
Wage and hour, we usually do for an hour and a half, and there's usually about 30 minutes of questions. So it's understandable that there are a lot of questions because it's very complicated and every business has slightly different fact patterns. So that's why I will do my best to answer it in a comprehensive way later. And I will stop talking now, Sandy. It's all you.
Okay, Jessica. Well, I just want to thank all of you again, as well as CalChiro, for hosting and sponsoring this webinar. I want to remind you that there will be the survey that pops up at the end of this webinar, and if you have additional questions, need further answers to any questions, just please include that in the survey. And I want to give you, I think the HRCI and SHRM credits already popped up on your last slide, didn't they?
Yes, they did.
Gone. Okay, all right. So if anybody still needs those, let me know. I will send those out. We want to thank all of you again. Go out and have a great rest of the day. Thank you all.
Have a great day.